Hi, Glenn Plantone here. I want to tell you a little bit about the lease option program that we've developed here in northwest part of Las Vegas, which is where we sell our turnkey operations, our turnkey rental properties to investors that want to come over internationally, locally, from somewhere in the U.S. and buy property. And it's worked out extremely well. We've done, I think, about 50 flips in the last year. And I've got a whole bunch that we'll be doing this year. We probably triple what we did this year over last year. But here's how it works. We buy properties typically 2004 and newer. These homes are in the northwest part of town. What we do is we stick with newer properties because they don't have the work, they don't need the work that an older property is going to need. And they're generally in newer neighborhoods. A lot of these neighborhoods are gated communities with parks and pools. Lots of owner-occupant type people in there, so they're really nice communities, families. New schools, a new area in the northwest, new hospital, new mall, new bus station, new shopping, of course, lots of new schools, as I said. Really good area, and that's why I like it. It's called Centennial Hills, and this is the area that we've done most of the business in the last 3 to 4 years. So that's number one. We picked a very good area. We're about 20 minutes away from the Strip. Second thing we do, by picking the newer properties, is they don't need as much work. But when we do renovate them, we fully go in and we repaint if need, recarpet. We'll add ceiling fans to the properties, landscape the backyards, paint two-tone colors instead of just a basic white, tile. In most cases, laundry room, kitchens, bathrooms kind of thing. And we deck these out so that the properties are in very good shape and they're very, very easy to get rented or leased. So we do that. When we do go take these properties and get them ready to rent or lease, we prefer a lease option tenant over a typical renter. And here's why we do. The lease option tenant pays a non-refundable lease option fee, generally between $3,500 and $6,000. That's a one-time fee that they pay at the beginning. Of that fee, 50% of that goes to the investor. That would be you or your investor if you're an agent. The reason why we do that is that 50% of that goes passed along to the end investor. The other 50% of that went to the person who found that lease option buyer, just like they pre-sold the home. So whether that's a realtor or whether it's a freelance person that goes out and particularly finds lease option tenants, that's their fee. When this property goes to sell down the road to that lease option tenant, there's no real estate commissions because of the fact that we've already found the buyer up front. And that's a real benefit for the investor because he doesn't have to deal with any commissions down the road. So that's number one. Number two, I should say, because number one was the non-refundable fee. Second thing is we get very strong rents from our lease option tenants, stronger than we would typically get from a regular renter. And the reason why is because these people come in, they take very good care of the house. They actually pay for the maintenance service calls. We as investors cover the warranty, which is usually about $400 to $500 a month, a year. And it comes out to about $37 a month. And then any service calls are paid for by the lease option tenant, and that's critical. So keep that in mind. It's very important. The next thing we do is we set a term between 3 to 5 years. We used to do 2, but we stayed away from that. We want to go with a longer term because we want the investor to be able to make a very good return on this investment if it is bought by the lease option tenant. Next thing we do is we set a sales price in advance of what the price is now. In other words, let's say you come in and pay $100,000 for a house. We're going to take that term up for a 3-year term up to $30,000 more than what you paid for it, which is $130,000. So that lease option tenant is going to have to pay $130,000 to buy that house in 3 years. If it's a 4-year term, it's going to go up another $5,000. A 5-year term, up another $5,000 to $140,000. So that when you walk in as an investor, you're in a pretty good position because you know, worst case scenario, they're going to buy the house for this much and you're going to have this much of a return. And our returns are generally coming out to between 13 to 18% return over that 3 to 5 year period, which is a very, very good return considering all that's involved. That does not include your depreciation allowances and other things that you can take advantage of tax-wise. So that's how that works. When the property is bought, assuming it is bought down the road, then what will happen is you'll give a credit. Generally, the credit is about $200 per month for every month that that tenant pays the rent on time over the term of the lease. So if it's a 3-year lease, 36 months times 200 is $7,200. So we will give them a credit of $7,200 if they've paid their rent on time. Now, when I say rent on time, I mean the rent's got to be paid on the first of the month or before. If it's on the second, it's late, they don't get the credit. And you don't give them the credit when they go to close on the house. That's the other credit they're going to get, of course, is going to be the lease option fee that they put down. And with that lease option fee that they put down, what will happen on that is they'll get that credited back to them after the fact, or when they go to buy the property down the road. So they'll get a couple of credits, but keep in mind that we've set the price on the house high enough so that when that house sells, you're still going to have a nice chunk of money that you made from the sale, the purchase and eventual resale of the property, plus the cash flow going forward on the property all along. So that's pretty much how the program works. The coolest thing about all this is that from our records and from what we've come across is about 70-75% of people do not exercise their lease option. Now, what that means for you is that there's a 3 out of 4 chance that they're not going to exercise. So you're going to end up with a non-refundable lease option fee that you keep. You're going to end up with a very strong rent over the term of the lease. You're going to end up with a great tenant that takes very good care of the house and puts good upgrades in the house, and somebody that takes care of the maintenance calls on the house if there are maintenance calls. That's what you typically don't get from a regular renter. You're going to get that from a lease option tenant. So it's critical that you understand how this works. And if you do, fabulous. If you have any questions, of course, call me and I'll go through it with you. There are a lot of other questions that might arise from this, but this will give you a good idea as to how it works so that you can go ahead and relate that to your investor so that that investor understands how it works. So if you have any questions, feel free to call me, 702-656-3264, and my email is gsplantone@gmail.com. Thanks.